Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are live from Manitoba. Let's see what we got in the markets today. You're all welcome. I'm glad to have you here today. Let's see if we are actually live this morning. I'm sending out some live vid. Okay, I don't know what's going on here. Oh, you can see it. All right. I think you were saying you could see that. I just can't see anybody responding on there. All right. We'll have to go another route, I think. I want to be able to have a chat with you guys, so okay. Hourly chart. Let's stick with the hourly chart for now. And I will try to figure out what's going on. So far we're finding support off this candle. And we're keeping this fair value gap open, which is good. I want to see that continue going higher if we're going to go higher and see if we can get a market structure break. If not, this rolls over. We want to see it take out this order block here, this little breaker, before going lower. Come back, find some support at it, and start pushing lower. And then we're aiming for down here once we get through that fair value gap, equal lows for more downside overall. So where are we sitting for a 4-hour chart? Four hours put us right back inside there for a reverse. So it looks like we're going higher. Still no structure break if you're looking at a fib range here. We're right at the 50% level. So if we're looking to go higher, we've already got the reverse back into the inversion fair value gap right here. And I want to see if that continues to hold when we get through this next one to the upside. All right, let's go back to the 15-minute. We have the videos. So you got relatively equal highs above you to aim for. And we have on the 15-minute chart, this looks good. I like to see this rejection block here at 18,149, 18,146. And then start looking for the equal highs. Let's go into ES. We have I'd like to see 282 or 287 to 306 on the upside for ES. Let's put this in order here. I like this response off of here, leaving this portion open. I like to see that continue pushing higher now, start running back up into these highs and filling this fair value gap, getting back into this order block here, this breaker. That's your Dow Jones. All the time they're finding support at those levels. I like that. Let's look at the British pound. More downside for the British pound right now. It's got to get back above here, find support to run for these highs. Otherwise, this support you just found right here for continuation on the downside. I'm looking for pound to get down to so you're looking at for 50 at 133.50, and then kind of scale out on the way down. If that's your entry there, then look for 133.50 as your next objective, and then 133.32. Euro. The euro, let's look at the euro here. Get rid of these. So euro's downside objectives, you'd be looking for 114.58. It's just about to hit 60 there. So if you can get a retracement back into the next hour or so, if you can get a retracement back into these equal lows, or a portion of this, if this stays open, look for a portion of that to stay open and continue going lower all the way back to filling or tapping these equal lows and then continue going lower. So I'm lower on the euro, the fiber, oil. I don't know why I can't see you guys live this morning. Oh, there we go. There you go. I can see you now, Dan. Or Del. Good morning. Good morning, Hadi. Good morning. Come out. Good morning. Quick solutions morning, friends. Today's the day. We some beautiful, clear price action, and we crush it. Good for you. I like that positive attitude. Campione, good morning. And good morning, Hans. All right. For crude oil, let's look at crude oil here. So we've got a break in market structure here to the upside. Got a nice full candle here. Trace back, hit this candle. We're looking for higher prices. So I'm looking for oil, get up into you got this whole, yeah, you got a whole box up there. This whole level here. So the uppermost box that we're hunting for would be in here. That's your premium box. At 63.42 to 63.48. See if we can climb on top of that. Get a little higher. And then from there, where are we going next for oil? $63.70 to $63.96. $63.96. Look at that as a potential upside. $63.96. So we get through this on a close. Look for the run to take the highs. Use this as leverage to go higher. And then look for a fair value gap to break out at up here. You only want to see a portion of that or just the tap of the fair value gap and then continue pushing higher. So you want to see a BISI. Once you get above this high, you want to see a nice displacement candle above that to indicate going higher with oil. If not, then we could be returning back into the range again if we're range bound right now. But right now we've got a breakout above this consolidation. I like it. A retap, cam 1, continue pushing for the premium range. Where are we with these guys? CAD USD. If you're into trading CAD, you have consolidation. We have to close below 72.40. Come back and use these candles here as support all the way up to 72.56, and then come lower. In order to get bullish again, you've got to get it back above 72.69 for bullishness. And for downside, you're looking for initial downside 72.28 to 72.22. Bitcoin, I hauled some ducats out of here yesterday on the weekend. You got a reverse here, body trades above it, you come back into it, that's a long until you get your first reversal. So if you're using the TP Model 3, then you're looking at right there. As soon as you trade through that, it opens, you come back in. If it retaps the open again, you're out. So your long would be from there to right there, and then you're out. The moment you trade above it again right here, you go, great, now I'm looking for it to retap this level so I can go higher, retap, get back in sync with the market, and continue going higher. That's on an hourly level. So upside objectives 88,969. I don't know why I have that on there, but it's there for a reason. It's where I'm headed first. Gold. There's gold in them there hills. So we have a reversal, change in direction, takes out 2, does not take out the 3rd, go back to the 2nd, continue through, get a market structure break in here in the hourly, and we're looking for this level and this for continuation on the downside to continue going lower. On the 5-minute chart, it's clear, you can see the reversal here. Body trades below it, we trade back inside it. No bodies violate that, and we continue coming lower. If you're trading box to box, you're in that second box right now. Monday's first presentation, fair value gap. It's a retap of that. So if I was looking for box to box trading, that's the level you're looking for right here. That's the box you're in. So now you want to see if this holds, or if we trade through this box and use it as leverage to go lower. And remember, you can use the whole box as leverage to go lower. And you're looking for range extension if we close below this box here. Morning, Derek. Thank you, sir. It's good to be back. I miss you guys when I'm not having my little my daily fix. So as far as gold's concerned, right now we're at $3,500. Who would have thought it would make $3,500 an ounce, hey? That's crazy. Oh, that was an upside projection, was it not, in our in gold? Oh no, that was Bitcoin. 1.5 standard deviations. So again, watch how that acts inside here. If we can get through that on a close, look for this box to support price to go lower. If it doesn't, we get back through it. Look for a run back inside the range that it's creating here for 50% or a retap of these old lows here. Disney, what's that been up to? Whilst I've been on the road. Oh, we had a nice little kick going back there, but looks like we're still headed lower. You know, you look at Disney on the weekly level. We've got these relative equal lows below us. We're into the mean threshold of this candle. The body's holding it quite well. So we'll see if we run and take out these equal lows below us now in Disney. UNG, still pooping the bed. We take out those lows. Good morning, Curry Fish Ball, and Craig, good morning. So for natural gas, still looking for more downside in natural gas. I'm looking for somewhere around here. This one's so much harder to call. I'm going to go with this right here. My downside objective with that. For wheat, we did not break market structure. We're pulling back into here. So I want to see us get below this imbalance. Let's see us get below 54.7 on a close. And then look for a run back into 53.92 to 53.54. So I'm looking somewhere in here for wheat. I don't know how many of you guys are trading commodities, but right there. Well, soybeans has hit its upside objective we were looking for. Now I want to see if we roll over here. We can get below this level here. I'd be looking for this to run back down into this range, create another rollover, get deeper into this range here, looking for a return back into this discount box at 1,000. Coffee hit the buy side. Now, there's a few spots along the way here for coffee. Let's have a look at coffee. Well, we hit our objectives the other day while I was gone. Objective 1, Objective 2, and those were hit nicely. Now I want to see if we can get some support right here at 362. I'm not going to be bullish again for them until we get above this candle, but if that doesn't hold, the go, no go zone is right here. You have sound now, right? Correct. I don't know why it keeps. I might be banging this thing. I might keep muting it. I keep tapping it and muting it probably. But thank you for letting me know. I can be careful I don't keep bumping that thing. I am muted for a second because you don't want to hear me chewing. All right. So we're kind of looking at this level right here. We're seeing if that level's going to hold. Traded above it, found support at it. Looking for continuation on the upside. No, I'm at my brother's place now. I'm at my brother's place here in Manitoba. Come out to see my mom and dad before we do the big Africa trip. Before we start going, I don't think we'll be doing live from Africa, but we will be doing live from England. And then Norway. Gonna do a boat cruise through Norway. Back to England. Then back home, enjoy a little bit of summer out here in Canada. Heading back to see my buddy Hadi in October. Then off to Thailand again. It's a fun-filled week or a fun-filled week, fun-filled year of action and adventure. Let's make sure I'm still, yeah. It's going to be an exciting life. I'm telling you, you got to enjoy your life while you can. If you've earned the right to enjoy yourself, do it. Help people along the way, but enjoy your life while you can, my friends. You never know when it's over. And it's been an interesting medical year so far this year, running down with these medical issues. Hey, but all the time I'm still moving. All the time I can still talk, still walk. That's all I care about, man. That's all I care about. Just keep on moving. Keep experiencing life. Finding some joy out there. Find some happy people. Surround yourself with like-minded people and juice the full flavor of life. Modesty is for monks, as Lazarus Long would say. I think the quote goes, to enjoy the full flavor of life, one must take big bites. Moderation is for monks. I don't know why he didn't do this. That's just me. That's my little flourish. Okay, so what are you guys looking for the rest of the day? Let's get out of this 1 minute idea here and let's get a better overall picture. So the hourly. See, hourly, we've got a nice little reversal here and a continuation, but we don't have market structure shift yet. So on the hourly, we could be into a bull trap, right? This could just roll over now and keep coming lower. So until we get above 213 on the upside, I'm not I'm not really bullish. Well, still bullish, but cautiously bullish. All the time we're staying above here, I'm good. I'm still bullish. And we'll start to see it on these lower time frames. It's like, for example, this consolidation that we have here. If you take that whole area as consolidation, if we start to close below this on a 15-minute level, looking for a deeper run back into here, and then we're looking for somewhere around, well, this Monday's new first fair value gap presentation right here as the support level. And if we bounce off of that, you would expect to see it go higher. Otherwise, you're just trading back inside this range. So so go down to the lower time frame, that's 15 minutes. So down to a 1-minute chart, you want to see a market structure shift in here. So we want to see us close below here. Use this whole area here as support. Now that we've traded below that level, you want to see it return back into it, just like we just did right there on the last minute. Tap it and come lower. Body's now traded below this level, so you expect to see that come lower now. Are you going to be in Oslo? I don't think we're going to be in Oslo. No, we're doing that fjords cruise, the boat cruise. So there's lots of fancy words, like little Norwegian words that are like that big, that I'm not quite sure about in terms of I'd have to look at the names there, but yeah, it's all going to be down the fjords there. We've got a balcony view on the boat, and we're going to just enjoy the magnificent views. Back in the basement. Yes, we're back, back in the basement here. Back in the basement. Why is this not... Are you guys having any problems with your internet, or is this just me? So we're cautiously bullish still. We traded below that level, traded into it. Inside this small range here, you're right maxed out in terms of high to low, and look for your return back into that's probably like almost 100% return into the mean threshold of this candle. We traded back through this level, cleared out the high, closed above it, come back, retap it, now take this high. So now we're just sitting on waiting for the 9:30 open and see where we go from here. It is it me, or is the screen is lagging? Good morning, Peter. 40-second delay? Are you serious? That's not good. You got no problems with the internet right now? Okay. Well, if Derek's is fine, then it's got to be my issue. I've got full on like 5 bars here. And my brother usually has pretty good internet here. Look, there's the, so now we have a body traded above here. Come back, give it a tap, look for that to go higher. Look for continuation. We're looking for these highs to get taken out now. Cautiously bullish on the hourly. So now I wouldn't want to see anything get lower than the mean threshold of this candle. So keep this candle here in mind. You don't want to see anything trade below that. And that's good with you. Okay. So let's just keep your eye on this level here. We got another 4 more minutes. Let's see where this goes. Have you guys seen a lot of those? I guess because I watch a few reels. There's a lot of people out there saying, "Oh, I'm doing all this trading for free, and you can sign up, join the community. I do everything for free." And then I go into the comment section, and I see people saying, "This is a scam. This is a scam." And I go, "Wow, they're giving away free stuff, and it's a scam." So I just keep going, "Hey, you should go check out ThetaWaveTrader. That's truly free. He's giving it away for free. Go there. You won't get screwed around there because it's all on YouTube. It's all live." And I haven't seen. It's like they're starting to pop up all over the place now. I've seen 3 of them pop up lately, and I'm going, "Wow, there's all these people trying to do a new twist on trying to give something away for free." And I can see why people get so frustrated with the idea of, you know, be careful what there's nothing in life is free. You hear that saying that nothing in life is free. I always like to disprove that kind of stuff. We're still, yeah, I like to disprove that stuff because we're giving it away for free. Michael gave it away for free. You initially had to pay for it if you're one of his charter member people, but you know, if you're, wow, that's not even working at all. Sorry, I'm just looking at my, internet wasn't even working at all. Yeah, there is a delay there, hey? Wow, I'm only seeing you guys there. I can't even trade my broker right now. I'm all disconnected here. Discombobulated. Anyway, let's just stay on this thing here. Don't worry about what I can or can't trade. I'll trade this one in front of you guys if we can get something decent set up here. So we're looking for a potential bull trap on the hourly. Like if this suddenly turns on us and starts going lower. We want to be able to watch that and stay on the horse. Or we want to still be able to stay on this if we're going to go higher. Again, like I say, we're still cautiously optimistic that this is going to go higher. We'll wait and see how the next minute or so unfolds. It's good to see Russell's back. Here's a 930. Watch this level right here. This is why we don't get super excited about these bullishness and these potential bull traps. There, right there. See how we close below that level? Tap it. Now I want to see that go short. A little late to the party there. Put the stop loss up here. So I don't want to see us eating through this level. You want to see a portion of that stay open. Otherwise, here's your classic. Get your ass kicked in that 9:30 hour. Yeah, see how it closed above that level again? On the wrong side of the bus. I'll give it a few seconds. I don't want to see this now go back above here. Got me. So now we wait for 9:30 to end. 9:30 to 10 o'clock. That typical, you want to see this run down below, come back into this order block, hold price. The fact you start chewing through here, and the fact that we filled that all up, not good signs, as you can see. Now watch it, if it potentially rolls over and comes back down, that's not acting the way we want it to, or not acting the way I want it to act. So you take a little hit on that. But again, the logic's still there. That would be the same as any other time. If you see a body trade below a breaker, come back into the breaker, find support, and keep pushing lower. The fact that it ate all the way through the breaker, all the way through all this stuff during that 9:30 time is a good example of why you should stay out of it. So we'll just watch to see how this unfolds now. Now you got to be okay with taking losses, you guys. The logic was there, but again, time and price is important. This continues to go lower. You can see why those big swings not acting the way you want them to act, but the objective was the principle's correct. Now, if the stop loss was sitting back up here, where you would typically put it, I'd still be in that, and we'd be coming back to break even. I think we got in down here somewhere, but the principle's correct. This whole whipping action during this time is expected. One of the reasons why you should stay out of that. That was a good example of getting taken out quite easily. I didn't want to see the mean threshold of this get taken. I didn't even want to see this close above this level here, and it did, and it's like, that's not a good sign. So if we continue going lower now, again, principles is correct, but this whips all back and forth and stuff that can really mess with you. Wow, they're just, let's go. Sign it up. Let's do it. So retap of this level here again. Now you want to see it just start exiting, start coming lower now. I don't want to see it just keep popping up into here. You've ran that whole area out, you've rebalanced it. Now you want, if you're going to tap this, you can start coming lower from here. You want to see it get some speed here now. And I'm looking for, so if you're going to use your fib tool on an area or discount box, if you're going box to box in the larger part of the range, I'd be looking for something in here. So I don't want to see all this eating away in here stuff going on still. Getting into some chop now. We'll just wait and see where this open range sets up. Back inside this little imbalance right here again. So we got overlapping first presentations. When you look at, first thing you got to kind of do is recognize when markets are not moving in your direction or not moving in your favor and how they're acting. And look at this whipping back and forth, lots of wicks inside this small little range from high to low. You look at all the wicks back and forth, very indecisive. So Don't get caught trying to chase price action here right now. Just kind of wait for your opportunity to see a clean setup. And if that means waiting around till 10:30, 11 o'clock, just wait for your opportunity. If you start chasing this, saying it's definitely going higher, definitely going lower, let me know, because I don't see anything in here that proves one way or another, other than the fact that your hourly is still slightly bullish. Your 15-minute consolidation traded above it, come back to the consolidation, CAM model 1, continue to the upside. Body trades above it, continue to the upside. Get into zero stress if you can, and see if that just continues to run for these equal highs above you, and look for these two candles right here, this little cluster of bullish candles. We take those out, good sign, keep running, and we're looking for this upside objective up here. What is this one? So like I mentioned to you guys before, just pull all the holes out of the wall here, and you kind of climb your way up. Well, you're climbing up a rock face, as Michael's described many times. Just kind of pull them out of the wall like this and say, what's a level I could hope to find some support at? Look at these on the hourly level as upside objectives. So reach for the old high, 50% of the wick, so 201, then 212, then look for this fair value gap to get eaten through. Don't be too surprised if we don't come back to 173 all the way to 164. That will be the beginning of the next hour, I would assume. Let's see a body get above here, though. Let's see it rock that up there. I'm kind of tucked in right here behind this one, just because I'm anticipating a run back here. So I'm kind of looking for the first opportunity to see a reversal here. So if you've caught this one on the run higher and you're trailing your stop loss, just kind of watch for the first fair value gap that you see here. That's a TP model 3, take profit model 3, and see if that's a level. So you're just kind of waiting for the first reversal. So you're stress-free in the trade, and you're just waiting to see if you can get an opportunity to catch the reverse. So we're just constantly looking here for the next BISI. So this BISI here, you look at this one. If we don't close below here, then this becomes a BISI. Hitting our next objective here, which is that little fair value gap, but see how we're going to act inside there. And we just want to see if there's a continuation on the upside, looking for this strong liquidity above us here, and look for support at these two levels. So if we do get a return back into 190, if we keep pushing higher, we're looking for this level to get taken out, and then looking for that to provide support. And we're not even worried about here right now. Again, what we're looking for here for TP Model 3 is any body like a BISI here. Anytime we get a trade below that on a close, this long, you can close out, or if you're aiming for a specific objective, make sure you pay yourself at those objectives, and then move to the sidelines and wait. So we're just basically looking right here, see if this candle closes below here. A wick can come down here. You just got to look at it and say, where am I inside this BISI? And ideally, you want to see this, just that little tap and leave. If it's still bullish, you want to see that. That's the institutional order flow entry drill for continuation to the upside. If you start to see it rolling over and nibbling here multiple times, it starts to lose its luster for me because it's not acting the way I want it to act. So then you're looking for the consequent encroachment of this, which is the midpoint, and it might end up being just the midpoint of this larger fair value gap inversion. So you want to see this with intensity now, start to really work its way out of here. If we look at the level we've got right here, from there to there, and find the equilibrium of that. That happens to line up right with the retest of the higher time frame. So tap this and then leave. So from your A, if we're grading the response here, this graded response, that would have been a nice one to see it just leave and go. That's a nice A level. B level would be like get down into this discount or the equilibrium or consequent encroachment of the BISI, and then start pushing for higher. And if it starts to eat into this, the last one is you don't want to see a full close of that level. So your D level grade is a passing mark, as if it comes down, taps it, and then finally leaves. More strength is when you see it staying in the upper quarter of the, if you're going to divide this into quarters, like if I go like this and divide this into quarters, look where we're sitting, top 25% right there. That's where you want to see strength. And you really want to see it accelerate out of here when you grade the response inside here. So the first 25, ideally where you want to see that go, and then start lifting off from there. So anytime you see these bissies that are forming, so if we're still long on this, which we still are, then right now, I don't want to see it come down into here. We've done our thing. See how we just keep coming down, tapping, tapping. If this has got some strength, you want to see it get out of here. You don't want to see this retap, retap. See how it's starting to come back into there? So now that's come back and got me out. So I'm out of that trade. Just because I didn't want to see it come back down below that consequent encroachment, and it did tap down below it. So again, your graded response is we don't want to see this fill in now. See this snap off of here? Watch that. So there's the 75% of the fill, and you want to see that last 25% of it stay open, and you want to see that start going higher. That's your D level. I grade that as like a D. It's a pass. It's a passing mark, but it's still considered bullish. And now you want to see it close above this candle's high or open, close, I should say. That's a bull candle. So you want to see it close above that. If not, if it starts to run back down here again, I start to lose my love for this because that's it. You want to see it tap it and leave. See how it's revisiting it here? You don't want to see that kind of stuff. You want to see the bodies just snap and go. So I start to lose my faith in it, and it starts to go retesting. So just watch this candle, how it's acting here now is very important. So don't just look at these candles and just we're waiting for it to finish. Watch how it's acting because this tells you so much. If you watch them enough times, that it's starting to lose its luster, as you hear me say many times. How that candle's acting, it's the psych candle. It's the one that will throw you off your trade, but how it acts is very important in terms of its hint for me, because if you watch it enough, if you stare at that candle enough and you watch how it acts at a key level and the fact that it comes back down again. So you've heard me just whining about I'm losing my love for this. Watch. See how it's closing, it's starting to poke through here now. And now that level right there, if we close in the next 51 seconds on there, you would have closed that trade out. Now, because it didn't act the way I wanted to, I got out a little earlier. But we'll see if my pessimism is pays off here. And the news is coming out soon anyway. Out at the rejection block again, hey? Right to the rejection block, yeah. Now you watch the next 9 or 10 seconds, and you'll see why. If it's not acting the way I want, I'm out. See how I've closed below it now? Now, that long, you would close out right there. You'd say, I'm out now. Take your profits, move to the sidelines, and wait. And if you get a retracement back into this level, consequent encroachment, or the high of that level, that's the potential for a short. And we're 7 minutes away from news. So do you want to be in something like that? This could just go booking it higher. This could be the next price leg higher. All right, so wait for the news, wait for the entry, and then wait about 10-15 minutes for everything to kind of calm down, and then decide whether or not you're going to make your move. This could be just the big return right now. See how we've just tapped back in here, start hammering it down. Where's our discount array inside this level? Give me the discount level. If you guys were looking at this, where's the discount box? Give me your number. So watch this level right here. There's a retest of the mean threshold or consequent encroachment of that higher time frame inversion. Now I want to see this kind of roll over and come back down here now. Or if it closes back above 230, then I'm back to bullish again. $9.37. $9.37. Oh, look at you, curryfish ball. This one here. I go with this one here. Any one of those would be fine. Always kind of look at your old high first if it hasn't been hit. Look for that level first as a range and internal range liquidity. So if you're short here off of this one, like we just talked about, if you're short off of that, you're looking for this 50% of the range, right? So you're looking for 50% here. So you're going to pay yourself there. It's a matter of like 30, 40, almost 40 handles. You're going to go short there. And remember, you don't want to close above 231. I'm going to go short there. No, I'm not going to go short there. I'm going to wait for the news. Wait for the news, even though it tells me I'd like to go short right there. But I'm not going to go short. Not during lunch, not before in 3 minutes. You don't want to be hanging out and then all of a sudden does it some crazy wackadoodle take off on you and you're way out of whack. So you're way out of position. Just wait for the news. I do love me some hot cross buns. That's typical British, eh? I do like a nice hot cross bun. So keep your eye on this level right here. Let's make it a little bit more prominent for you. Watch that level right there. Two more minutes. This looks like another price leg higher. Won't make the decision for another 8 seconds, but this looks like another higher run. Range extension. Come back into that level. There's your range extension. Right before news. Typically that's your first little objective you'd be aiming for. You'd want to see this wick right here first. Come back and tap this and then start to extend the range to give you your entry for a long. But now that you've taken out that range, watch this candle because the next 60 seconds or so, we could see this just take off out of here and this is the next price leg higher. Right? That would be something like like this. And we'll put this in as our upside goal. Retap the old high. You want to see this stay open now as a breakaway gap. Just tap that and go. I want to see if this news starts giving us a nice little momentum here. $18,383. I like this volume imbalance, price imbalance up here. It's 309 to 368. That whole section up there looks like it's I see this hold price here now at 223. 233. Come back into this. We've tapped it already. I like this. I just want to see it leave from here now. We're right up on top of this hourly fair value gap you see here. See that little civvy we have? We're just closing above it. I don't want to see that again. It's one of those graded responses. I want to see this start to really accelerate out of here now. These two candles become important. Watch right here at the mean threshold of that candle, which is a fill of that fair value gap. First one's fine. Second one you want to see stay open. It's a 2, so I should see it. You should see it climb out of here now. I don't want to see another a 3, 4, 5 get below this 2. I want to see that 2 set the low. Start pushing higher. Today's tip is in the Telegram channel. What's the tip in the Telegram channel? Yes, I agree. Good for you, Hadi. I like it. I like it. You got to get some legs out of here now. That's it. Let's go. If you're following Hadi on the Telegram channel, he's giving you some really awesome advice there. See how we broke this to the upside? If you can reintegrate or tap this old high here, it's a continuation on the upside. Keep your stop loss tight. I don't know where your stop loss is, Hadi, but mine is tight as a mouse's ear here. I don't want to see this I don't want to see it come back down here. I want to see that just leave here. Now that we've got these two candles, I want to see these two act as propulsion candles now, and then start to really accelerate this price and find some support off this level. So I don't want to see us drop like this kind of stuff. I don't want to see that come back down in there. Again, you could come all the way back down to the bottom of this. The volume imbalance. Yeah, I like this up here. That 316, that 300 big figure. I definitely like that level too. You're out now. I'm still holding on. Holding on by my knuckles, by my fingertips. Your stop loss is too tight. Well, that's okay, man. That's protecting your money. There's nothing wrong with that. There's nothing wrong with protecting your investment, you guys. Don't beat yourself up on that. Let's go. Let's go. I want to see a tippy tappy at that level right there and go right on a 7. Right on a 7 from here to here. No more than that. 265. Really strong if it just leaves from here. There you go, buddy. Head on up. Head on up. Next bus is coming. It is indeed, my friend. I'm still long on this as well. Okay, I'm out now. I had that tight. I didn't want to see it come back and tap that. As soon as we got up to here, I was like, "Ooh, I'm staying right there." So I'm out too, Hadi. I chased that really tight. I didn't want to see this retest this low. And there's nothing in here that gives you an indication that we're changing direction right now. So I could have stuck it, kept it a little lower. But we'll wait. We'll catch another bus, Hadi. We're not worried, man. No need to worry. Risk free now. I entered 10 micros, bagged 5, another 4 set at the low of the 1 hour volume imbalance, and 1 as a runner previously set. Good for you. Yeah, look at that. we both did that one, Hadi. Pulled it a little too tight. Just came back and took me there. Bugger. Okay. Yeah, well, there are many more buses on this bus route. Look for your 300 big figure all the way to 368 on the upside. Russell, you're in this? Good for you. Good for you. There's your 300. Nice. There's your big figure. Derek's Magic 8 Ball. Shake it up. Now look for the rest of that volume imbalance. I want to see us push into that. No. That's okay. You'll get that curry fish ball. You'll get it. It's a matter of practice, 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 and seeing it. Once you see it, it's a beautiful thing. So 346, my upside. Change your heart to a little white dove. More than a feeling. That's the power of love. Make a one man weep and another man sing. We can get into this imbalance here. Where are we heading to next, my friends? We are looking. Pull the holes out of the walls. Right there. So watch this. Structure break is down here. Changing directions right here. That's a 9-10 turn. See how we closed right on it? Just tapped it, keep coming lower. So that may be it. You just tap in the bottom of that imbalance, and then we're going to get a measure of retracement back into these levels, and then push up higher again. So just kind of watch this right now. This is your 10. This is potential silver bullet right here. Your 10, oh yeah, 10 o'clock's right here. Your first. So inside this range, I want to see this level get taken out. If we just come back and tap that, you don't want to see this. If you're still bullish, you want to see this level get closed above, find support at this, and start pushing higher. If not, I want to see this candle get taken on the downside, find its mean threshold to this candle's or this fair value gap busy here to give it a little tap, come back lower. Like this would be like an institutional order flow entry drill. If you can just come just above here, tap it into this consequent encroachment of this, come lower. Body's now closed below that level. You've now tapped it. You want to keep coming now. You want to see this mean threshold give way. And see if we take out um, this low. Then where's your discount box? Curryfish ball. Inside that larger range, where's your discount box? So watch this mean threshold now. See if this holds price, or we're just going to pop right through it, get a structure break, and then look for more downside. You've already got a change in direction, market structure shift. So there's your first indication that you've hit your higher time frame objective, what Derek was calling right here, this imbalance. You've hit that objective right on the bottom, and you're seeing a change in direction. So now you want to see this continue pushing lower. And now you've got that, you're starting to get a market structure shift. Again, don't get caught in a bear trap. We're going to get a body below here, don't forget. If you're trading inside this range, not that you could have caught that right away, but we talked about it right as it was happening. 50%, 62%, mean threshold. Now you want to see a body close below here. You got 23 seconds to see a body close below here, and then use the mean threshold of this candle here to come lower. We've already traded below it. You come back into it, see it running deeper into the range, and your discount box is right in here at 214, 217. If we don't get a body below here, there's the mean threshold. That's good. Now I want to see it keep coming lower. You don't want to see it climbing up any higher, otherwise we're coming back into this range, and we may be revisiting this one that we never got a chance to really get in on right here. You got to keep coming. No body. Wait for the body. You're out of yours, Dow. So like for this example right here, see how we've got this highs taken? As soon as the body closes above that, you can use this as support. We were talking about that. Now, as soon as it starts to run higher, you're looking for the first BISI that gets traded below. And then you can close that trade there. You can close it out. The moment you see it close below it, you go, I'm on the wrong side of this. Move your trade, take your trade out, and you make your profit from the high to the reverse, right? So see how we're kind of just banging off this mean threshold right now? You want to see this next price leg keep coming lower. Again, no body below here yet, so you can get caught in a bear trap. If that snaps back up and comes back higher, you get caught in a bear trap. And see how we're running through the mean thresholds? Not what you want to see if you're bearish. Now you're looking inside this range and you're saying, what's 50% of this range? Right? 50% here brings us back into this order block. And we're through the mean threshold of this already. And we still don't have a body below here yet. So 62% will put us back inside that box again, that premium area. And then if you start getting into 70, 72, and you start to overfill this, then you start to look at this level here and say, we've taken a low, we have an immediate rebalance. If we get a body above here and it comes back and finds support inside this, now I'm definitely inside this range and potentially going higher because the bear trap has been set for those people who want to go lower. It gave you a little poke down here. Did you chase that candle and go lower? If you did, here's your immediate rebalance, find some support at this. We went through the mean threshold. We wanted to see that keep going, and the fact that it kept coming back and drilling into it gives you. That's why I tell you, you look at those candles, and when you see those candles not acting the way you want them to act, you got to say to yourself, do I, am I confident enough to know that if I'm wrong and it takes off on me, I'm okay? I've just studied that, screen capture that, and talk about that in your journal. What was happening at that level? What made you act to get out of your trade? Again, it's the psychic candle, right? It's the one that's going to throw you off if you don't know how to study it really well. Otherwise, you just wait for it to finish uh, its minute and then make your decision. We've traded above that level right there. Your decision is, hey, I don't like that mean threshold. I want to say it tapped and then leave. It didn't. It closed above it, came back, tapped it one more time right there, and then hit the 50% we're looking at here. We have an immediate rebalance. We've closed above that. Now we're looking for a run into the range, and watch this level here. Here's your premium box, box to box. And if you're playing it off the mean threshold, perfect mean threshold to the box, you pay yourself at 70% optimum trade entry. Now watch, see how it's starting to poke through here now? Bear trap set, bear trap snap, and take your foot off. So those are the rules you have to have around. You've got to get a body below this level. If you get suckered into this and you say it's definitely going, because this was all bear candles, and the moment you saw that as a bear candle and it was running down there, you're going, oh, we're going lower. Wait for it to finish, and it turned around and came back and go, okay, well, mean threshold. We still haven't had a body close below here. And through all the explanations I was giving you in here, watch this level right here. You've got to see a body close above here now if you're bullish. Now, bull trap is a run back up inside here. So you got a bear trap. Those who want to go lower, now you're getting your stop loss. If it's sitting here, it's squeezing you. And the bull trap is where we don't close above that level right there. We have a wick. We don't have a body. We have a mean threshold. We don't have a body. Here had a body, but we didn't have the low. So that high's got to get taken. And this has to, you have to close above this level. Like we had here, we closed below that. We're coming deeper into the range. This imbalance, we ran above it. We didn't get a chance to get back in on it. This one here, you traded above it. You came back inside it. You tapped it right here. We went higher. And now you're looking for this mean threshold to give way to the upside if you're going to go higher and re-attack this volume imbalance above us. Good morning, Chris. How did I recognize it was a bear trap? Just by those things I just gave you, all those criteria I gave you around what institutes a bear trap. So you're prepared when it's happening, you're prepared to say, am I trading internal range liquidity or am I trying to reach for external range liquidity? If you try to reach for external range liquidity, you got to think about you're about to put your hand or your foot into that bear trap. How do you get confirmation? Well, you need to see this trade too. Once you've taken that low out, you want to see it trade back into the mean threshold of this candle and keep going lower, or the low. And that's a graded response again. So the low, the close, or the mean threshold. You don't want to see it start getting above that. Then you start going, the potential is to run back higher if there's a SIBI here. Watch them enough and you'll see them, Chris. You'll see the rules that we will run those same rules over and over and over again. So same kind of thing we're using now for the bull trap. We've got to see a body close above here. See how that level's become a very sensitive level? We want to see a body close above there, not the wick. So this is the psych candle. See how we've just closed above, right on it again and opened right on it again. And we're not closing above that level. So bull trap, it's holding you right now. If you think that's going to go higher, it's got to violate that mean threshold, which is an overlap. You got the mean threshold and you've got the SIBI. And we have no body above there yet, so you're stuck inside the potential bull trap. So now you're getting this compression starting to happen. We'll come visit this discount array down here one more time. And then you got to say, I've got to break out above this level right here, and I've got to break below this level here and here for me to continue going lower. So you got your two different sides. Are you going to play inside that? No. If you're just doing internal range liquidity, box to box, you're looking for a hunt back into 264. Now, I'm not saying take that trade. Don't. I wouldn't. I'm not. So you just kind of wait and see. Study the price action. Watch where it's going. How are these levels important? How does price act? Draw them out. If you need to draw them out on your chart and watch how they act off of there. So, you're pulling this whole level off right here and you're saying, I want to see how it's going to act inside that level. See, look, this body's just holding on it. And I'm looking at this discount box down here and I'm going to say, I bet you we're going to hunt for this discount box from here to here. Oops, right there. And then you start to go, what internal range liquidity am I looking at here? So if you're trading this, you're looking at this is your field of opportunity. 50%'s already been hit. So if you're short off of this level, you're short and you're saying, as soon as it hits 50, I'm moving my stop loss to break even plus the cost of the trade. I'm take half my trade off there. I'm running for 62% and my discount box. And then I'm looking for the discount box to get broken on the downside. Then I'm looking for a reattack of this sell side liquidity and a body to get below here. That's the things I'm looking for. Okay. I'm going to remove this so you can see there's our discount box hit, box to box. And we called it from up here. That's internal range liquidity. Does that make sense to you guys? And that's a quick internal range liquidity hunt, and that's at 294 all the way to the first one is so 30 handles in 3 minutes. Does that make sense? Do you guys get that? Ooh, somebody's calling that long, hey? Which one of you guys is calling that long? So watch that level. See how it's been filled perfectly now? That immediate rebalance has been done. So now you start to say, I'm internal range liquidity. So now I'm compressing and I want to see this level get hit now. Right here. It's going to hit it before I can get a chance to draw it out, but you'll see. Right there. Boop. Done. Box to box. Internal range liquidity. Now we'll see if we can get above that level and then start hunting for the upside. Right now it's compressed so much that it's got to bust out of here somehow. And look at that. That's the perfect hit from box to box again. So there's no more boxes to hit in terms of liquidity. So if we come back and tap this one more time, the high here, Russell, you may be right. I think that's Russell that called that next little, or is that Lambo? Give that call to go higher. You want to see this bust up out of here, find support on there, and start moving higher if you're going to start running for your midnight open. Call it the bull trap, the bear trap. That little box, see how it bounced off the little box? Now it's trading through here. Now we're looking for, go back to our rule. Now we've traded below it, tap it, come lower. You want to see a retap of this level here now before taking the low. If it just takes the low, then it's being more aggressive. Then I just simply switch over to, wanting to see that order block get hit. There's the tap. You can use the whole thing all the way to the top. If it starts to trade through it again, another bear trap has been laid. You've got lots of equal lows here, and then it's coming back into this range, and you're back from here to here again. Oh, there's that little guy in there. Don't forget about him or her. So body closed above it, tap it, come higher. Look for this level here. See how this consolidate, even in a consolidation, these candles, if you understand where they're reaching for, still make sense. And you can see where the traps are. You get a better understanding of it, even in a tight consolidation like this. I'm giving you a level that you can see where you expect it to turn and what you're expecting to see uh, a trap, where the trap is laid out. So you're going to be one of those cautious people walking through a minefield and you go, there's a trap. If you're going to set up a trap, this would be a perfect place for you to put it right here, right? And you would say, if it closes above a specific point, then I'm definitely in the wrong place. I don't want to put my foot down on that. Otherwise, kaboom, it's going to take your foot off. So you can see that was a bear trap, bull trap, bear trap. Now, you see how we're compressing here? Support, support, you're back inside between these two, they're bouncing around. You have to see price break out above or below this level for you to start saying, okay, now I'm a little more of a run back into a larger range here. Yeah, I want to see a body get up in there, Derek. I've got a feeling that we're going to go up into that imbalance, the volume imbalance that you had there. This level, I got a feeling we're going to have another drive for that. But you want to get confirmation on that by seeing this level get taken and that level get taken. So a structure break. But look at all the liquidity they've engineered down here. Quickly run down here, snap in here, take this out. And this level, notice how this level has not been revisited. We ran through it to find support to go higher, but we have not come back. We've revisited this one, but we have not retapped this level. And this would be a great opportunity for us to drive down into this level, take out these lows, and then start going higher. So the kind of engineering all the liquidity here for all those people that want to hunt for that, if they've got the savvy to recognize that as an objective, what a great opportunity to jump in on them, take them out here, and then send it higher. Yes, Adi. Wait for the shift. Wait for the shift. So we're running back up into that premium level again. Bear trap, bull trap. You can see them. They're so clear once you see them, and you go, Why stress over trying to keep jumping in on these? Because if you're in on this and you're trying to catch the long or the short, like you're trying to jump, oh, you can see how you're going to get beat up in here over and over again. If you don't recognize that you're in a bear trap or a bull trap and you hold too long and you don't just quickly run for a small objective and say, I don't care. If it takes off on me, that just confirms that I've got market structure shift. Otherwise, I'm just hunting internal range liquidity. If you're a seeker of internal range liquidity and consolidations, you're loving this kind of stuff because you get a 15-second chart. You see them all over the place here. Let's go to a 15-second chart. I'll make my point. Premium. Body trades below it right there. Body trades below it, and you're looking for a run back into this range here, this immediate rebalance. There's your immediate rebalance. So how we trade below it, trade back into it, look for a range extension right there. That's your immediate rebalance. We traded below it. We came back. We just gave it a little tap right there. And then we continue running lower, wait for the reversal. You see a reversal right here. Body trades above it, come back, tap it, go long to the premium box, box to box. You take it out, see a reversal, trade back all the way back inside it, bodies hold it, and then we run back all the way down to box to box, box to box, box to box. And then you wait for a reversal, reversal takes out a low, change in direction, come back, find a support, run through the high, take out the high, and you go box to box. Box, 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 box. And the last one finishes off this box right back in here one more time. So that's 15-second chart, my friends. Clean, clean, clean machine. Do, 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 do. There is quite a delay there, eh? I just saw myself explaining that clean machine. Yeah, that's a long to see why there's only 29 people in here. Too much lag, man. How do we increase the speed? I don't know if we can increase the speed here. The latency. Let's see if we can move this over here. See if I can pick up the latency in the speed. Nope. Now you see how we're trading just above that level? You want to see it come back in and tap that now? Right there. Go along right there. Now we have the body traded above this level. Come back from support at it. You want to see that go higher now? Now for me, I want to see that close above that level. Then I'll move my stop loss to a break even. So back to mean threshold again. I don't want to see that going lower than that. I'll be right back. I'm just going to head to the bathroom. I like this mean threshold here, holding price. You want to see it really start to accelerate out of here, though. I'll waffle around in here. We're looking for this imbalance to get filled. At least the consequent encroachment out at 336 to 362. sell. Pay yourself at that level. And we're in profit now, so it's a zero stress trade. Now we're looking for the next level, which is the 368-ish area, 366. Midnight. Oh, was this? No, that was the upside objective we were looking for, wasn't it? We put this in here as a price leg continuation at 346. So my next objective I'll take another partial at is the end of the price leg. Helps if I have my headphones on, right? Volume soft. Here I was thinking that you're talking about trading, like volume is soft. So I'm just looking for this to fill in the, I want to see this stay open now. Just institutional order flow entry tool would be nice. I want to see that tap that level. I'm going to take another one. I'm going to sell another partial at the end of the price leg. That's where that is right here. That's what I'm looking for. Then I'll take another partial at the high of the imbalance, and then see if we can, and I'll move the stop losses up accordingly. So now I'm going to continue to practice, and I'm practicing now, my TPM 3s. Does that make sense? So the TPM 3 is take profit model 3. That's Sibby to Bissy. And to me, if it comes all the way back down, taps me out, I'll take the 1100. I want to see this stay open. Boop. Got me. Now again, let's just watch and see if that, see how we close right on it. Keep coming lower. So I'm glad I got out of my trade there. Because now we're going to come lower. So you see how that makes sense? Where you've just traded now, if you went from this entry that we had here to the run, and you see this first reversal, move up, move to the sidelines, or catch your next direction, or close out your trade. That's just my TPM 3 model. It's up to you guys to choose what you're going to do, but I'm out of that trade now. Take a bit of profit, move to the sidelines, nibble away. Now, if this reverses, you'll know why I got out when I did. Now you're looking at this range here, and you're already well back into that range. So if you're short here, inside this range, as soon as you hit 50%, that's going to break even. Take a portion of your trade off, and you have to ask yourself if that's worth it for you to trade this little small range here. If we start closing below this level, which is what we're expecting, we're looking for a run back down into, where are we looking for? We're looking for 281. This one first at 295, then 281. And as Hadi says, it's macro time. Macro. Look for the first fair value gap after the or the 1050, and it's right here or here. Market structure shift. We want to see that coming lower. You can come back all the way back up into this little candle right here. Change your heart to a little white dove. More than a feeling. So this is the candle you're looking for right here. You want to see that whole price? No body got below here yet. Bear trap. Watch out for your bear trap. If that holds price, it's got to hold it right here, right there. If it trades through it, you're on the wrong side of it. No body below here yet. Watch this level. If we trade up to this level right here, tap it, turn around and come back lower. Watch right here. That's like the best place in case you're wrong. Come back, get you out. It's going higher. It's already closed, put a wick through there already. So I like this going higher. But again, it's one of those potential bull traps now. We want to see a body get above here and a body get above here on a close, not just a wick. Because now you're inside this range. You got this one here to go to, this one, that one. They're all overlapping. So if you want it to go lower, it's got to break below 307. If you want it to go higher, it's got to close above 325. I'm trying to give you a little bit of the gameplay before, because there's a bit of a delay in here. So if you get to this and it's already done the move, because we're like 40 seconds behind in lag time here, that's the level we're looking for. So right now, as I say, as I'm here at 14 seconds left of this candle, we're still below this level. So we want to see a body get above here on a close. And then we're looking for a range extension. So pay yourself at the high, like right there, rejection block. Now you want to just see that keep marching higher now. We're again aiming for the rest of this at 372. Now we're looking for a retap of the old high or a portion of this fair value gap to stay open. So consequent encroachment, if that stays open there, comes back in the next candle, comes back and taps this, or we look for an institutional order flow entry drill. I don't want to see this. I want to see it stop right there. The next 40 seconds just kind of waffle back and forth here. And I want to see this turn into a fair value gap. Or just come back and tap that high if you want. I'll take that as a long right there. Now what I want to see is this continue going higher here. Now that we've tapped that, leave this portion open and start marching higher. Then my stop loss is just going to come right there. Just wait. I wanted to see that just leave. The fact that we're even coming back down here, this now becomes, I've popped above this high. Is this going to roll over here now and treat this like a fair value gap? And then we're going to come lower into this range. I want to see this get some legs and get out of here. It's 11 a.m. So this would be the time for 11 a.m. to start making its move to come back down into the range. Now that we've cleared, we might see one more little pop up there just to fill in this imbalance one more time. And then look for this level here and this level here to get taken as a market structure shift to start coming back down into the range. So just kind of keep your eyes on that. Be careful. So you want to see one more little pop up to 362. Exactly. Be careful. 11 o'clock. I'd like to see us take one more run on these lows here. Remember those lows we talked about? Lunch or 11 o'clock. Run these lows out. And then look for 12 o'clock to take us like a little swing in here. And this would be, look at this. Look at this. A four banger puts us right up into here, right up into that, dare I say, the premium box. This is the premium box. The upside 4-banger for the day. How's that? So wait for a return and then wait for your, play that out to your SIBI and then look for a reversal and a continuation to the upside with that 4-banger as the objective for the day. Oh, we got a few more minutes here. What time is it? 9 o'clock. I'm just going to spend a few more minutes with you guys and then I'm going to go spend some time with the family. And you guys can, Derek, Hadi, and the boys can kind of guide you on the Telegram channel from there. There's the run to the high of that imbalance. That's all completed. So now what you're looking for is, now that that's been drawn to, I'm expecting to see some sort of a little reversal here now, a little change. It's time and price now. We're expecting to see some sort of reversal. We've hit a higher time frame objective, and that's filling of that price imbalance over there on the hourly. Now, if this has got intentions of going higher, it's going to completely ignore this and just keep ripping. Just go running all the way through there. But I'd like to see some measure of retracement in here, back into this last hour's up close candle, some measure of retest of either an old high here or a retest of 328 all the way down to 310. So a run back into this breaker here. This could be one of those days you just kind of wait around for the macro every hour and see if there's a setup every hour for the macro. This is 7 candle, so this one or the next couple of minutes should make a high. As soon as this candle closes, you should see a little triangle appear right above that candle there. Ping. Now you want to see this roll over, come back down. I don't want to see the 910 create a high here. And I also don't want to see a 910 take a swing here and then start running higher either. If we're going to get a measure of retracement around 11 o'clock here now, that 7 o'clock or 7 candle is what I'm looking for here to continue to come lower. Mind you, 9, 10, 16, 17, 18. There's not a level, there's nothing specific other than we're on this level here. So you're looking for 7, 9, 10, 16, 17, 18 to find us some level of is this going to be the minute that we're going to see a reversal off that high there of the imbalance. Now, the little poke through, the little mohawk through that, I'm okay with that. I'm okay with that because that just tells me, guess where I want to go. I'm going to come back here. I'm just going to give you a hint that that's where I want to go. I'm going to come back and get that a little bit later. Do a little retracement back into this candle and then, or into 50% of this wick, divide this into quarters, this BISSY here. It's not quite a BISSY yet until this candle finishes forming, but that candle's body is what I'm looking for, measure retracement. So I don't want to see a big candle here on this hour. I just want to see a small little candle. Some wick is fine. And then I want to see that retrace and start our 11 o'clock retrace back into, or 12 o'clock retrace, making us our swing point. So you see how 11, 12 makes our swing. Right back into a level we're looking for on the hourly. And now I'm looking for 12, then 13, 14. In the next couple of hours, you're expecting to see a continuation to the upside. If that's what we're going to do. So that's my thoughts on that idea. And I'm going to stick around with you guys for about another half hour or so. And then you got to spend time with your family, man. You got to spend time with your family. Don't live in the charts. Live life. like a friend of mine used to say, this East Indian friend of mine used to say, Darren, you gotta work to live, not live to work. Because I used to work all the time. As a medic, I used to go take my pager home on my days off and I'd be on call. I'd go home, I was on call. Like I was just obsessed with my job. I loved it. I just wanted to be there. I wanted to be the guy you called. I'd turn up at your house. I was going to take care of you. So I just work all the time. And he used to go out and used to ice climb in the mountains. When I was living in Canmore, I tell you, he was ice climbing. He'd come back one day and he's got this cut on his face. You're like, where'd you get that? Oh, chunk of ice hit me in the face. Like, what do you mean a chunk of ice hit you? Oh, I was just climbing the side of a mountain. I was on Terminator. It's like, what? You're on Terminator? Yeah, it's formed up this year. It's great. He's hanging off these giant icicles on the side of the mountains. He sticks his ice axe into the ice and chunk of ice comes down, splits his face. He's like, isn't that awesome? He's out there enjoying his life. Here I am, like, yeah, I was on call this weekend. I had a good call. It's like, dude, you gotta live to work, not work to live. It's like, yeah, that's a good point. But when your occupation is your passion, it's a it's an interesting thing for sure. So there's our 10, 11, 12. Still looking for this to come lower. You're out of here, Dale. See you later, buddy. Enjoy your day. And if you look at this, how we've ran above, we've come back into this level to find support off this order block here. Find support, and then we continue higher. Look for that trade or take profit model 3. Here's one here. You don't get a trade below it, so you're still in the trade. You get another one here. You don't trade below it, so you're still in the trade. You got a little tiny one here. You don't trade below it. You continue your trade, and you're still in this. You're still in this, and you're still waiting for a BISI to get taken on the downside. So until that level there gets taken on the downside, you're still long on that. Again, keeping in mind what if that's your objective, then you just paid yourself out right there. You're done. You just wait now. You're going into lunch hour. If it takes off on you, you just say, I'm okay with taking that money, run to that objective, what Derek was pointing out earlier, and you're done. I'll be happy with that. And if it keeps taking off and you start talking to yourself in a negative way, you start talking to yourself like, oh, I should have been in this, I could have, you're just judging yourself based on the new information you have. The information you wanted was that you hit it. And if it takes off, don't worry about it. There's plenty of opportunities. It's about finding some zen place for you guys when you're trading and not letting this get you down or stressing out or greed. I should have, I could have, I would have. Nah, no shoulda, coulda, wouldas, man. You see Hadi, he'll just sit there, he'll wait for that perfect opportunity, and then he takes it. He doesn't sit there and go, oh, I'm going to take every one of these trades that I think it should have come here, so I'm going to try and revenge trade this. He just waits for his next opportunity. If the bus leaves without him, that's okay. We just sit there at the bus stop and eat our lunch. It'll come around. The next bus is coming. So again, I'm looking for this candle to be a small candle. You can put a little wick up here. You can even take these highs out here with your little wick. And I think that is right there. What's the high on this candle? 83. Where are we at here? 83. So those are equal highs now. That'd be a great place to freeze it up, then come back down here, gather up some more uh, longs, and then take out these shorts. Oh, that little pool of liquidity is sitting right up here. Just let that sit there, engineer that in there, hold it, come back down for lunch hour, take this out, then run back up and take out that pool. Or take those guys up and pair them up with people back here, 50% of this range. So I'm kind of looking at, let me put that back to where it was supposed to be. Come on. Look for this here. Let's say, for curiosity's sake, this is the high. 50% will put us right back into here, into that level that we're looking for. 62. 50% here, 62% is a return to these old highs here. So I want to kind of hold that right there at 384. If it's one handle above those old highs there and comes back into that range, look for equilibrium, 50%, whatever. So you've got to see a consolidation, a displacement, like a very intentional candle to go down, and then look for a retracement for a CAM Model 1 for continuation on back into this range. Or again, see how we just got a wick up here. We'll see where this candle ends in the next 40 minutes. So if this has got intentions of just still driving higher, then if you're in that, again, you still have not seen a reversal candle in here yet. So you're still long. 384.75, yeah. So you want to see a nice displacement candle here. Right there. I want to see that hold price now. And that run above you here. Come on, what is wrong? I want to see that hold right there. Nope, it's going to take me out again. I'm through that. That's coming. That's going higher. Get out of that trade. That's the ideal place you want to be. Again, rejection block, roll over, still come lower. But we've traded above that level. So if this just taps here and starts going higher, look for that to go higher. Too consolidated now. Taking some hits and some wins today. Let me see what I got. What's my history this morning? 245, 1,000. What's this one? That's this morning. That equals that. 46, 44. Okay. Gonna be hunting for my rebouncing my little account there this morning. I'm in a little drawdown. Buy side getting swept. I'm telling you, this thing's just going to turn into a small candle and we're coming back into here. I feel it. I feel it. My stop loss was too tight. Just wait and see. Wait for your 11:50 macro. The 11 o'clock certainly not giving us the reversal we were expecting. Just watch this candle turn into a small little candle, and then we're the next hour retapping this 12 o'clock, tapping into this Bissy here. It's going to turn into a Bissy. I'm pretty sure of it. And I'm looking for inside this range. Then a few downside objectives. So now it's kind of another one of those practices of how do you stay in price action now and wait for that first little SIBI to form to tell me we've got the new reversal coming. So we're just going to trade this again, same way. My take profit model 3 is what I'm working on now. So it's a zero stress trade. If you're looking at your TPM model 1, pay yourself. Move your stop loss to break even, pay yourself. I'm going to do the take profit model 3, which is the first SIBI I get that gets broken to the upside. I'm out. We'll see how long we can stay in this trade for. That's the institutional order flow entry drill. Just popped into the fair value gap there. I want to be just above the halfway point because I don't want to see that more than half get taken. I want to see it continue on the downside. So again, now I don't want to see this revisiting this wick here. So I'm going to set my stop loss just above that wick. I don't want to see a revisit of this. If we're bearish and we've got intent I want to see that leave. I'm quite happy to walk away with the 800 in there. You're done, Hadi? I'm new here. Where can I read all of these models? There's nothing to read. It's just a matter of these are just certain models that I've created that uh, I just show you every morning. Any one of my videos, you'll hear me talk about. Like not this Sunday, but the Sunday before. If you look at that video one, you'll see I'm talking about the different models, the four different take profit models. So you watch. Now that we've taken this low, no, we haven't really taken that low. So just to retrace back into here, watch this level, see how we've hit that perfectly. That's a fill, but we have to get a body through there. I didn't even want to see half that get taken. So now if this comes back and just taps that, that's perfectly acceptable. And it can roll over and come back down deeper. And that will be the next price leg lower, which is what you want to see. But if it closes above that level, then it's not what you're looking for. So just look at that Sunday video one, and you'll see me talking about take profit model 3 and 4 models, along with I discuss the profit take profit model 1 and 2 as well. Again, watch this candle, see how it's coming back into that level again. You don't want to see that. You want to see it just tap this and go. You don't want to see that level get taken. If it gets closed above there, look for a run back into this range. 50%, 62%, whatever. See how we bounced off 50% of that whole range there? That's all you need to come back and just give it a tap. I want to see this. Got to hold now. Got to get out of here with some intention. Get out of there with some intention. So following the rule, if you're following the rule, this did not get a body traded above it. I got way too picky in here. Your stop loss should sit up here. Wait, if we get a body trade through it, come back into it, get your trade off. Otherwise, you miss this opportunity right here where it trades right back to it perfectly and then leaves. I'm still in on this on a live trade, so in front of you guys is not. I don't want you to kind of get picky about your trades like I was. Like I'm demanding a very specific level that I didn't want to see get taken. But the rule is if it body breaks this on a close, then we're on the wrong side of it. We're going higher. We did not break that. So the fail safe right there, it comes right back to your fail safe and literally kisses it on the nose and says, are you going to trip? Am I going to trip you here? and you're going to take that trade off because you think this is now going to reverse against you, only when the body gets above there. So that's the rule for take profit model 3 is the body must break the immediate CB. Otherwise, you continue with the next price leg that we talked about, the next price leg lower, which is from 50%, so it should be a completion. You should see a run down into this discount box down here now. Look for that 75%-ish kind of level, 75 to 78.6. You do not want to see it get above here. If it does, then now you've got that rule of trading in that direction. There's the SIBI taken to the upside. If a body closes above that, before taking this, look for a tap and then a run for this high. Otherwise, more continuation on the downside. And it's at a time, 11 o'clock. We didn't want to see all this waffling. We said the 16, 17, 18 candles. 16, 17, there's 21. There's the 20. Reverse. It's been a slow grind down, but remember we're talking about, I want to see this candle create a small candle now. It was okay to do a little mohawk above there. We've got the mohawk. Now I want to see this continue to run back into this little range here now. And I think that's going to be it for me. Uh, you get my point, and we're looking for this range down here, the 7. I'll wait for it to hit this level here, just so I can kind of do a mic drop moment where you call the downside level, and then from there, you guys know how to look for range extension after you hit 70, 75 here. And I will leave you guys for the day, and I'll see you again tomorrow. There's the first box right there. We hit it. That's the discount box, 62%. If you're doing your haul from higher to lower, you pay yourself model cam or the take profit model 1, you'd be paying your stop loss will be sitting here at 50. You've just paid yourself another portion right here, and your next payment is sitting right here at 70%. If it comes back and takes you out at 50, be happy that you got some profits. Move to the sidelines and don't sweat it. You would have paid yourself here and here 2 profits, and you're zero stress on this trade now. And here's your next one. You pay yourself. There's the 70 I told you about. That's hit. Look for 75 now. Right there. There's 75. You're moving to 70. Your stop loss comes down to here at 70%, and you're waiting. You're like literally, you paid yourself at 75. If it hits 78, you move to 75. And you watch, you're literally sitting right here. So I put my crosshairs on there so you can see it right there. If it comes back and taps it, you're out of the trade. It's done. If it doesn't and continues there, you're out of the trade now. That would be you done. All the way down to here, you paid yourself all those profits all the way down there. That's the take profit model 1. It's easy for beginners, those people who are not sure about how to trade internal range liquidity. It's a quick, easy guide on how to pay yourself on the way down, and it works awesome. Even when you're on the wrong side of the trade, it works really good. So my bottom of my discount box is sitting right here, and then I'll close it up for the day, and that'll be it. If you like what we're doing, hit the like button, and yeah, subscribe if you're new to our channel. We're happy to have you, and we're here showing you guys how to trade this price action every single day. You should be able to walk away with some profits or tune into your model a little bit more clearly now as we start to show you more precision with this price action model. Hopefully you guys get to see how accurate it can be. There it is, fully completed now. That's the box done, discount box. Now if we trade through that, look for range extension, right? You're looking for this to continue going lower. And with that, I hope you guys had a nice, awesome day. Sorry it was a bit slow at points, but I think we still gave you a level of precision that was pretty amazing. As far as I'm concerned, it's pretty amazing. And I'll see you guys bright and early tomorrow morning. So thanks again for tuning in. Subscribe, hit the like button, tell your friends, come on in, join us. We're happy to have you. We're on the Telegram channel. After this, you'll catch us on Telegram, still posting trades there. If you still want to be active in the community, you'll find us there. It's in the link above. You're more than happy and more than welcome to join us there as well. So until tomorrow, I will see you guys bright and early. Have a great day and be safe.